This presentation is prepared in 3 sections. First part talk about embedded finance. The second part is a very short introduction about Vestigo, and I also left some time for questions and answers. You can choose different platform possibility to send possible questions if you are interested in it. Do you remember the days when people had to go to the branch to make a bank transfer? In the future, bank customers will also know about this, but if they will forget that there was a separation between financial services and their everyday lives. Whenever at the checkout on online shop, when buying gasolines on gas pumps, or even buy house, consumers will have instant financial product tailored to their personal situation, right where they need them. Embedded finance allows you to integrate financial products directly into your non-financial digital application. And I put simple in my favorite way, embedded finance is integration of banking like services offered by non-banks. What is potential? Embedded finance can potentially bring more revenue to companies who work together and build new products. When everyone focuses on what they do the best, they can deliver a very innovative joint proposition faster and cheaper, and merchant knows how to sell the product. And bank is an expert in processing and payments and providing loans. And everybody should do what is his best capabilities. And also it is very important to the banks because it have a multiplicative effect also to the banks, fintechs, and also for the merchants. Because for the bank it's very expensive to win a new customer. It is approximately cost of acquisition is from 150 euros and rises until 250, depending on a particular or market acquisition model, which is rather big cost to the bank. And this embedded finance give them a possibility to win them new customers. In a term of market potential, many estimates in the future income by ownership of such some tracks. Now I put some point on the market potential. Like already on the previous presentation, Mr. Mantvidas pointed, lots of numbers and prediction of growth of a potential of embedded finance is significant. And now for the different perspective, the follow figure demonstrate the expectation forecast for the market of embedded finance in 2030 in euro. There's estimates that in Europe by 2030, 50% of the revenue book of the retailer banking revenue pool will be associated with the embedded banking. The analysis of the above mentioned figure demonstrate that embedded finance would also grow in upcoming years. The expected domains of embedded finance are payments and insurance. The growth of course, will be also within other spheres. Also, this estimate says that in 2030, almost 17% revenue pool will be in Europe for this retail banking of traditional bank. And 50% of revenue pool will be from embedded finance, 5% will be from neobanks. So these things and the research says that banks have lots of more potential at this moment on the market. In the terms of embedded finance segmentation and typical use cases, there are at this moment, as Montevideo said, payments, buy now, pay later, card issuing, lending, banking, wealth and assets management, insurance, and more complex use cases probably come to play. On this slide, we talk about embedded finance business model and different type of partners which are involved in this part. on the highest level, it is banks or financial institutions, then partners, and of course, everything is playing around the customer. And of course, as we heard before, everything goes about partnership. It is all about trust. It is all about understanding who works what and who wants what. From bank perspective, if banks wants to do this, they want to grow as much as is possible, like everyone else, which means they should be able to, let's say, achieve or acquire as much partner as it possible. If you want to be a big, that means you will need to be able to deal with many industry verticals, with many operating individual verticals, and with so many possible operating model. And once when you be able to do this, you will be able to onboard partner quickly and manage also without lack of small team, because it is not acceptable in 21st century to, for example, employ for every new big partner employ additional resources, because it stops to be economical. Also, it is important because this possibility of upsell and cross sells, and because you have all core products on one stop. If you are a vendor of financial products, it is also give you a gain access to the new clients, as we said before, and also it reduce cost and transform the nature of the financial ability to offer financing exactly where the customer need it, not only, as I said before, on the branches or your portal or your end channels. From the partner perspective, as a distribution partner, it gives these guys also embedded finance possibility to integrate well, and it leads to sticker customer relationship and customer loyalty and customer lifecycle value. This provides stronger sales of their products and services because of capability of products, possibility of easy cross-selling of financial products or value-added products, which leads to additional revenue from these parts of cake, which was previous not possible. At the end, if people will not get offer financing when they want to buy something, they are going somewhere else when they will have this possibility to be provided. And in the turn of partners, this is also from perspective of partner, you know, how may have also have a big group structure. If it is a big partner, they could have several entity brands, and maybe will also could have some sub partners for the third party. And if you will be able to work with all this and support all these possibilities with one partner, you will help them to work and win them. The important element is also if there is a bit some offline element is commission plans to partner staff and all other things. So this is a sort of case study which is derived from the Vestigo system, but like the way we do, this is the core products, and in the level of partner level modification happens at this partner management model level. We have thousands of partners, but so in essence, in a term that like bank have few core products and the thousands of partners, it for them still build still few core products. In many systems, every partner combination sometimes would mean separate products, which would gain to the lead to complexity, and it is very hard to manage it. So it is very important to be able to run like some core ship of core product tightly, and then to deal with the partnership modification to provide this efficient customization and differentiation and to make it as easy as possible. And as I said before, all is play around the customer. From customer perspective, with embedded finance, the clients can give financial services whenever they need them and in a convenient way. It put two customer journey in one, buying something and at this moment financing that. It don't matter if it is a payment, it is a loan, if it is an insurance, but they want to have possibility to got the full service. And it is connected, of course, to the related financial services. This is saving time and energy by getting everything on the same or some point of sales or pit stops, and give a possibility if the customer is buying some with bundle, they provide them also not some better experience, but also a better price. This is also faster and easiest transaction acquisition of financing, and they provide to them offer but better terms. So if there is a cooperation between partners, banks or fintechs, for the merchant partner, if it doesn't look works good, there is a risk that customer or consumer leave this place, and it is also a risk for the bank again that the customer will never comes to them. It is really contextual. If it is really seamlessly creates a lot of good experience for customer is provided. And for the recapitulation, as Mr. Mantvidas pointed, there are lots of benefit for the customer, like retaining the front-end customer experience, increasing the number of customer touch point with brands, and increase cross-selling opportunities. Conclusion for this part be that everyone have benefit from embedded finance, and clients, partners, bankers. They have higher income, new customers, more convenience and complete service. Now we move on embedded finance stack part of the story. You can see on the picture many layers of stack as we see, which are needed to provide this functionality: license, general ledger, product factory, partner management, integration layer with APIs, and on the top of that is customer experience layer. There are different possible cooperation and co-creation that bank can only provide license, and all this stuff are provided with somebody else, like fintechs or neobanks. Then is possibility the bank can provide license plus technology and integration APIs. Then the higher level is the true collaborative partnership. Then banks collaborated not only with the license, providing the license, technology, product factory, integration with the APIs, but collaborating with third party to help to create tailored products to direct customers or consumers. We will go from the basement to the top. First, about regulatory license. This is necessary license to provide regulatory finance services and ensure compliance. The foundation of almost all embedded finance is regulatory support that provide access to regulatory financial services. It is not for the all services need to have full banking license, but it sometimes can be reduced and can be only e-money institution. Then its product factory is a layer of financial products with bank capability data or services designed to build financial products and propose to the end customer through the partner. In this area where embedded finance partner move to consume specific areas like payments, treasury, lending, etc. This from partner, this layer are sent by APIs messages, put, get, etc., and they are received and acted by institution for different purposes. For example, to onboarding customer, to fulfilling an account, etc. Then is partner management layer. It is layer which provide automatic management of commercial and contractual relationship with distribution partners, with efficiently involved group companies and partner into the embedded financial relationship. This is highly configurable and affects because it should be provide effects partner onboarding and efficient customization, which allows partnering across different verticals and various models. Later we talk about case study from our experience. Then it is integration API layer. Without this, embedded finance probably would never be as it is today. Of course, there were integration and embedded finance before APIs, but it was few and very rudimental. Integration API layer is fundamental to enable embedded finance through bank as a service or service providing the front access data to functionality. This layer provide API connectivity. Instead of APIs orchestration layer, which is pointed to bank on-channel platform to interact with customer, this APIs integration layer should point it to the partners. API should be effective and easy to consume by non-banks. And on the roof of everything is customer experience, which is not provided by non-bank brand, which recognize the need of financial service product. Non-bank experience, which will be connected with the finance experience. A third party led end users to the digital journey, including obtaining the financial service product at the right time and the right place and the need of end customer. This module is like a Lego block. The bank doesn't have to provide fully bank as a service. As we heard before, they can have different partnership with the fintechs and the neobanks, but it can only provide the license, technology, or real collaboration partnership. Of course, you can collaborate, as I said before, with different technology partners which provide your necessary components. Now I will talk about case study from for two layers from embedded finance, stuck from previous mail in more details, because we are not only APIs which are important to provide embedded finance, but also these two stacks, core products and partner configuration. Partner, when we talk about embedded finance stack and banking as a service, crucial is to provide efficient also backend system with management, with the efficient management, because it is foundation of success of related product factory. Partner level configuration and agreements is the cornerstone of this system. Our system manage all attributes and logic related to the cooperation agreement with the bank and the different partners. Also, lifecycle management like annexes renewals. Agreement can be also done in advance with activation in the future. It defines until it's valid, terms of activation and termination, and also a related lifecycle to the contracts and the clients which are connected with this partner or this contract. Agreement can be done it is possible to define a single partner or multilateral agreement partner with different agreement terms. Different types of partnership are also managed in the system, like a merchant, financial institution, other bank, intermediary, association, charity organization. Also, there is possibility for multiple partner agreement topologies, different products. Product can also have possibility to exclusivity or convention. This means that some partner want to have some exclusive products for them, or when some small partners can get the fast or choose the fast product which is already exist and only put some fine tuning. Also, there is also possibility to define who. Then it is possibility to agreement delegation terms, possibility to define who will perform parts on onboarding process like KYC, risk assessment, AML, and other things. It is possibility to define it will be some partner or a bank. Also, product association with partner financial term. For example, paying or billing membership fee to the partner, commission per fee, a kickback, commission paying for recommendation to partner staff. If you activate also possibility connectivity to the contract and different loyalty programs, different definition of payments, etc. System support also different partnership type, and also outbound communication, definition of contracting of partner staff who will have proper entitlements, using right identification model with privileges of what to do, assessments to the contract and partner agreement and other related contracting data. And also integration model with APIs for partner management data, for exposing transaction fees and all data which are needed. From core product perspective, it is an advantage, as I said before, to have all core products on one platform because it is efficient and controllable, and provides it is separated from the partnership, and the definition of the product on the level of partner is very easy. It is not so complex, and the other modification are done on it is joined to this products, and fine tuning and modification is done on the lowest level, and on this way we don't have lots of products on the level of the partners. In the case study with one bank, we provide them possibility to onboard a new partner within the hours. Of course, it is not this part integration with APIs or integration layer, but only this onboarding. At this moment, by this platform, it runs more than 1,000 partnership of different types of verticals: financial, institution, charity organization, and sport club, and even more customer-facing products based on example 10 typical core products. And for recapitulation, I think you will agree that embedded finance has a strong potential for financial institution. I wasn't talk about company for which I work on the beginning, so I will now introduce Vestigo in short terms. In terms of Vestigo, we are a PayTech company out of Zagreb, Croatia. We specialize in finance, banking, cards, business, and payments. Our clients are financial institutions, like banks, business to consumer specialists, third-party processors, loyalty specialists, and national clearing system. We currently operate in 7 markets like Croatia, Switzerland, UK, Ireland, Slovenia, Italy, Liechtenstein. We grow in ambition. We have developed in different products and module like holistic pay, Vestigo issuing, acquiring payments that relies on core situation solution that are supported by by APIs and microservice architecture. So we'll think lots of about holistic payment and embedded finance partnership. Everything what we do is very customer centric, API first, with more than 2,000 with 200 APIs. Thank you for your time and attention.